we never put anybody on the spot with saying exactly what that number was going to be, but you were looking for a strong number, and this is
this feels like a really solid number. The number I was going to give was 159 with some downside. I feel like 136 is a healthy number, especially because you saw the good healthcare number. We expected a little weakness in manufacturing and retail. I think that's kind of par for the course of where we are in the cycle. So I feel really good about this data, especially in light of what we had earlier this week in terms of the ISM. So I think equities will do well through the balance of the day.
Hey, Steve, you've had a minute to dig through some of that. What jumps out to you as the most important parts in this report?
Yeah, thanks for the whole minute there, Beck.
Yeah.
Yeah.
Work fast.
I just was trying to see the last time we had a 3.5% unemployment rate, and it looks like you got to go back to 1969 for one. Look, here's the problem, and we sort of flagged this problem back in August, is that August is very typically revised higher. So the slowdown we thought we had in August at 130, which we thought was, hey, we're coming down to the place where we think we ought to be, that was revised up 168.
Yeah, never
mind. I like the revisions. I think those are good. I think that tells us that we're doing a little bit better than we thought we were doing. Question now is, are we now down to that zone where we thought we should be, which is 136,000 right now? Let's just be clear. The private sector, very weak at 114,000. You have to take note of that. 122 the prior month. You're getting a lot. I just want to double check this. Yes, from government. I don't have the detail in front of me. I am guessing that those are census workers. Retail has lots of problems, down 11,000 and then down 6,000. We have to watch that sector. There's a huge transformation, as you know, happening over there. I like the temporary help number, and I just want to see the work week here. Weekly hours were up 0.1, not so great. And I did not see the wage number, but I'll tell you what happened with the unemployment rate, which is a huge decline in the unemployed, down 275,000 with 117,000 coming into the workforce. So that's a good number. Look, there's two scenarios that we're watching for here. Scenario number one is a sort of expected slowdown as the crazy 200-plus job gains of last year come back down to normal. If we can settle and call it a 125 to 150 range, that would be good. And we're more worried about the weakness going down below 100,000. I think what Kate said right at the top of this show was right. I think the idea that we're now in a zone where it looks okay, it's pretty comfortable, it's not great, but it's not terribly weak, I call it a win.
Hey, Rick, a dollar stronger on this number. Yields for bonds spiking, too. Walk us through the market reaction.
Well, a couple of things. First of all, interest rates ticked up about 2 basis points from where they were, but they're still, let's put it this way, 143 was the previous cycle low close for twos. We took that out yesterday with a lower one by 4 basis points. We're right back there. So even though we're up a bit, we're kind of going back to ground. You know, how do you make 143 look like a high rate? You start at 138, I guess. But if you look at the dollar, it has strengthened up a bit. But to me, the biggest news, without a doubt, is that the markets looked at it as good news, stocks and treasury yields. But it's really a bad report, and not for the job side. Wages, this is terrible. Unchanged month over month, under 3%, 2.9 on a month over month, year over year basis. These aren't good numbers. It's all about the money. On the jobs, listen, Steve, I understand your predictions are better than mine lately. I'm on the high side. But to me, to have these numbers, probably the new average is around 150,000, to have that when the world's so impacted by self-inflicted issues, and I don't mean in a bad way, people are trying to figure out trade. To be holding that level during that ordeal, to me, is a big positive.
Austin, that pit in your stomach go away?
Say that again. I couldn't hear.
Did that pit in your stomach go away? What do you think of this report?
Yeah, a little bit. But, you know, this kind of a mealy peach of a report. We're a little under what the forecast was. It's okay. Like Steve said, it's okay, but it's definitely not great. And this dynamic about the census, I think everybody should keep this in mind, because as we come to the end of this year, beginning of next year, the census temporary hiring is going to ramp up in the hundreds of thousands. So we're going to start getting jobs numbers that, if you're including the public sector in the number, we're going to see big positives. But then all through the summer of next year, you're going to see huge negatives, like minus 100, minus 200,000 coming from the government. So We got to keep that in mind.
Austan, though, I'm surprised that you don't have the pit in your stomach, given what Rick said, because you're looking at the wage issue, decelerating, not accelerating. How important is that to you?
I think it's pretty important. Now, that wages are steady after we've had several months where they were growing. It's not as big of a pit because hopefully this is a blip. But, I mean, I'm telling you, the thing driving this whole thing is that the GDP growth rate is slowing down. And a lot of the forecasters are now saying that they expect a one handle for the rest of the year. If we get GDP growth falling down into the ones, I think the jobs numbers are going to fall apart and the wage numbers are going to fall apart. So let's hope we don't go in that negative direction.
Dave, what do you think? Growth expectations for the rest of the year, what are yours?
I think they're continuing to be strong in the 2 to 2.5%. From a political standpoint, this is very good news. The fact the unemployment rate is an historic low, that's what most people around the country look at. And the job creation rate is averaging now at 160,000 a month. When you compare that to pre-Trump, the Obama era at 109, that's very good news that he can take to the public and say, we're going to continue to grow the economy, create jobs. And the wage, it's a slight downward trend in the direction, but it's still a positive increase rather than a decrease in average wages.